joining in. Aishwarya, good morning. Thank you so much for being with us. Great to have you in. So, Aishwarya, what have you made of the market action? All of these IT headlines, which bears made the most of it. But yesterday, we had some semblance of stability. Do you think the worst is over?
Good morning. Good morning to all the viewers. Obviously, I believe we have entered a lull market after the quarterly season. Not much of information hitting the market, and as you said, majority of the global markets are shut. But back tomorrow, yesterday, what we witnessed was some revival in IT. I sincerely believe that IT is still not out of the woods. The sentiment adversely will impact the fear about growth taking a hit because of the impact on their ADM and the ERP implementations and things like that because of Anthropic and all that is always there. But if you ask me clearly whether majority of these Indian IT companies will stay put with growth over the next 5 years, yes. Whether the software companies will exist even after 10 years, the answer is yes. And over the last 20 years of at least my career, I have seen many such events where every technology is been told that it's completely different and it will, hit the business big way, whether it was cloud or SMAC or digital and whatnot. But we always seen that, Indian IT companies have found ways and means to, get that revenue going and ticking. Obviously, this is one where the impact is both on revenue as well as an employee. But I believe Indian IT would be required to, basically modernize the whole legacy system which is in place. And we believe that if I look at on fundamentals, if I just see what kind of growth rate at this valuation majority of these IT companies are building in, on the free cash flow yield generation capabilities, they are at these prices at 15 to 18 time PE, are basically building 6 to 7% free cash flow yield. And if we compare it to various of other events, the numbers were much higher from 12 to 15 to 20% FCFC imbibing into those numbers. And we should not forget, so if you remember COVID and after COVID in 21 mid, IT index was almost 16% of our Nifty 50 allocation. Today, I think we're at decadal low at around close to 8.5%. So pessimism is all around. And the fear is obviously that the revenue will be hit hard. Somehow at Fident, we don't believe that. We believe that obviously there will be some, sentiment which will prevail. In short, we believe it's a time to go and do shopping in IT. Possibly a couple of months or quarters, there will be uncertainty or the stock price may stay here or possibly go down further by 5-10%. But there is more to gain than to lose. So we are very positive on our capabilities of Indian IT to find ways to move out of it. And I believe at these valuations, risk reward is very favorable.
Okay, so you are a supporter of IT, given the sell-off. I mean, everything's good at a price, right? Just to figure out whether you've reached that price point or not. So Aishwarya feels that there's some merit in looking at IT stocks. Okay, Aishwarya, hold that thought. We'll, talk about it a lot more. Let me also welcome in Shrikant Chauhan into the conversation. Shrikant, great to have you with us, join on this format. And I'm glad to connect on money control. So, Shrikant, tell us, are you bringing us good news this morning? Is the worst of the bear phase over? Yesterday, finally, we had some green on the screen. It looks so good. So, what did you make of it?
Yeah, good morning, Survi. Good morning, everyone. And many congratulations for this new opportunity. And like you did really well since last almost, I can say, at least 20-25 years. And definitely you will do much better in your new role.
So really, Shrikant, looking forward to actually working with you and, the entire team at Kotak Securities as well. Because our idea is to make markets as simple as possible for investors out there. People have very short attention spans. So we have a tougher job at hand to deliver that piece of information to them in nice, short, simple to understand nuggets. So I look forward to working with you as we get on this journey. Thank you so much.
Yeah,
Go on. You were talking about the market.
My entire team will definitely will support you and your entire team.
Thank you. Thank you so
for
much.
markets, yes, we have seen, I think after last 2-3 months of instability in the market, now the flows are turning more and more stable. If we go through with the domestic flows, then based on quarterly numbers and based on the overall trade deal news flow, now the currency has also started stabilizing. Quarterly numbers are better than the expectations. And I think this particular news flow is definitely going to support the market on the downside whenever there is a correction in the market. From the global markets, if we see, then bond yield was around 4.40, 4.20 for last so many months. But now it is very close to the crucial level of 4%. And in case if it breaks 4%, then we can expect furthermore weakness, furthermore gradual downward activity in the 10-year bond yield of US. So, which is something positive for emerging markets. That is what I am going to say. And dollar index, which was around 97, 90, 98, 99 levels, it's currently trading below the mark of 97. So I think all these macros are definitely going to support the market on the downside. And I am of the view that downside is, let's say, we can see again 25,500, 400 in the near term. But on the higher side, the market is definitely going to rally in next few months. So eventually we are expecting market to move towards 27,000. And by the end of calendar year, we are of the view that index should be somewhere close to 29,000. But in the near term, because of this uncertain news flow, we may see some more volatility, and that will be an opportunity for investors as well as traders to take some positional trades.
So, Shrikant, now just expand on that. Those positional trades, should they be all on the upside? I mean, is this still a buy on dips market at a fundamental level?
Yeah, definitely. Because see, if we consider the overall performance of the market, then it has spent a lot of time within the range of 26,300 and 25,000, 24,500 on the downside. So within these 2,000 points, the market is consolidating. And on the dismissal of 26,400, we can expect rally towards the next levels. But till then, all these large cap companies like HDFC Bank, Reliance, ICICI Bank, they all are consolidating at we can say similar sort of levels. And around those important levels, whenever they are falling, whenever they are correcting from the highs, we are seeing good amount of buying interest. So broadly, I am of the view that it's a definitely buy on dips market, and we should be buyer at current levels and more on dips.
Does that include IT stocks, Shrikant? So buy the dip theory, does it apply there?
Yeah, it's a we can say it's $1 billion question. Because the way they have fallen in last 10 days after the announcement of the trade deal, I am of the view that someone has taken exit call from the IT stocks or IT sector, and they have just battered the sector. The IT index was around 40,000 levels. From there, all the way it fell to 30,000 in a very short span of time.
True.
So whenever we see such type of activity in the market, we need to be careful. Ideal strategy should be to look for reducing exposure if there is any upward activity or bounce back after hitting the extreme lows. So for the time being, it is better to stay away from taking any contra call. Let the things get stabilized. Then only we can enter into the market for IT stocks.
Okay. Okay. All right. Aishwarya, you've already made your point clear that you think that IT is looking, pretty decent to consider from an investment perspective at this juncture. I want to talk about some other spaces as well. I mean, financials in particular. What have you made of the gold financiers? Because that move on Muthoot, we all still remember that big crack, 10-11%, despite numbers being pretty okay. Manappuram is going through its own corporate action. I mean, Bain will come over as a promoter of the company. So within the non-bank space, let's start with non-banks first. Would you look at these gold financiers? Would you look at something else? Shriram Finance as well has picked up big money, and they've already got the RBI approvals for the Japanese investors to come in. So again, from the non-bank financial space, what would you keep your eye on, and what do you like?
Yeah, so Surabhi, we are very positive in that space. Given the way how credit growth has picked up, if you see the latest data, even in this quarter, majority of them have. So if I see the blended number, the growth is upward of 13%. We saw credit growth inching to almost 14.5% end of March, end of January 31st. So we are very positive, and how are we playing through is like we are invested into Shriram Finance in the last 1.5, 2 years. That is one of the investment which has really worked well for us. And what has really given us confidence is the way we have seen majority of the FDI happening in the space, right from Federal to RBL, Manappuram, Shriram, and many others. It gives that there is a comfort on the valuation and the kind of growth which is visible. And second point is that if you really look at the stack, compare it to the private players, and look at how this NBFCs and other non-banking player has played out across parameters, whether it is name, asset quality, look at to cost to average assets, and their ability to generate return ratios, ROE and ROA. There's a remarkable improvement over the last 3, 4 years, but there was a gap on the valuation compared to what the other listed large players were trading at. That valuation gap has inched up. So even in Shriram, we have seen massive re-rating of Cholamandalam right from 2020 to 2023. But that part played out in Shriram, and that's why we went ahead and invested into Shriram Finance there. Coming to gold, we were very positive on the gold assets space, but there are very few handful of players we can play through. Obviously, Manappuram is one which we have seen that stock from almost 160, 170 has moved to upward of 300. And because of Bain coming through, I believe there's a lot of improvement which will happen, and that will give a lot of comfort to the investors. And there's obviously a open offer which is just around the corner. And we believe even that gold prices at this level, if they're sustained, that provide a lot of impetus for at least the growth. Even Muthoot came out with a very strong guidance on tonnage, but possibly there's some sort of market loss which is happening for Muthoot, which has been taken over by other non-gold financiers. But having said that, I believe there's one area which one should be aware of, that kind of volatility in the gold price that will have a clear-cut impact on how many of these gold NBFCs will play out. So I would say easy money making is more or less behind, both from Manappuram and Muthoot. It will be more calibrated approach for any investors to go and invest. Wait for us staying away from both of these gold finances. We are positive more on NBFCs and your say SMITs, primarily the smaller banks, and some large allocation to the private banks over there. We are staying away from PSBs, but we are very, very positive on that space. Only one area in the NBFC which I'm a bit doubtful about growth is affordable housing. We have seen the last 2, 3 quarters the growth is sluggishing. The growth is not happening in the low segment, and we will be watchful of a couple of more quarters to take a call whether to get into or not. But that is one area which is somewhat not interesting, but majority of the other ones are making a comeback.
Okay, all right. We'll talk more about some of these financial stocks as we go along. By the way, someone on our live YouTube stream is asking the question, "Aaj Nifty mein kya ho sakta hai?" We'll get to that. We'll get Shrikant to answer more specific here and now Nifty trades in just a bit. Ravi's asking me about, okay, why did I move out of Bazaar call? It was a fab troika. Ravi, thank you so much. But yes, I've been here on Money Control, so not too far away. And we continue to have market conversations. So that's what's important. Shrikant, before we get to stocks and news, since some of our viewers are already asking that question, I mean, the here and now, immediate here and now for the Nifty, what levels to go with? At what level do you enter? How long can that trade run? Where should stop losses come in? What would the Nifty trade be?
Yeah, so if we go through with the averages and option statistics, then based on that, the market is having support at 25,500. Below that, again, the market can fall back to the yesterday's lowest level, which was around 25,370, 350. So ideal strategy should be to look for taking some contra bet of going long if there is any lower opening today, up to 25,600, with a tight stop loss at 25,400 of 25,500 on the downside. If it breaks 25,500, then we have to exit because it's a intraday trade that we are suggesting for our clients. But yes, in case if there is any consistent weakness in the market and if the market remains below 25,500, then we can expect further more weakness. Otherwise, I am of the view that 25,500 should act as major support.
And this, I mean, since it's an intraday trade, you would expect it to run to what kind of target? Nifty on the upside, Shrikant?
Then again, on the higher side, 25,750, 25,800 going to act as major resistance. Because yesterday when there was like upward activity in the market, we saw resistance shifting from 26,000 to 25,800. So 25,800 is now the next level to watch out for.
Okay, got that, got that. All right. Let's do one thing, gentlemen. Let's quickly run through some of the stocks in news today. Earnings season is thankfully over, so it's more peaceful this morning. But we have a couple of stocks that should be on your radar, so let's quickly go through them. First and foremost among them obviously has to be Infosys. Like we've been telling you, the company is planning to outline its AI strategy at its Investor Day today. CEO Salil Parekh is going to be addressing investors and talking about how AI will translate more into growth. Mr. Nandan Nilekani is also speaking at that event. It starts at 11 o'clock, so a big one to watch out for. This JSW Infra, the board is meeting on the 20th of February to consider a fundraise. This is going to be by a mix of equity instruments, so watch out for this. Cochin Shipyard has emerged as the lowest bidder for a 5,000 crore rupee Navy vessel contract. So Cochin Shipyard on the radar because of this. The final award is, of course, subject to the completion of all the formalities. So we need to sort of wait for the final green signal to come through. Texmaco Rail, it has secured a small order, not too big, but about 219 crores. This is from Mumbai Railways for the design, supply and installation of the suburban rail line network. Embassy Developments, it's received RERA approval for its first project in Alibag near Mumbai. The estimated GDV, the gross development value of this project, is about 400 crores. So that's Embassy in focus as well. Moving on, BLS E-Services, the company is looking to acquire 100% stake in Tiati Tech. This is an all-cash deal. So BLS E-Services basically done a small acquisition. The value of this is about 154 crore rupees. They're looking to complete it by the 31st of March. So these are some of the stocks in news. Like I said, not too many names. Shrikant, I just want to go back to that point on technology. Let's go there and put some numbers to this. Now, if someone is looking to take a short-term trade on IT stocks, I'm not even talking about investment. Actually, tell us if you think it deserves a more, a longer-term positional place in portfolios at all. But even if someone wants a short trade, 1-2 day trade, between the entire IT pack, which stocks would you call out? Because everything was thrashed, right? Mid cap, large cap, everything was down. So where do you see the trades now?
So from the IT services or IT particular sector, these large cap stocks have fallen to their extreme levels in last 3-4 days. And stock like Infosys, TCS, they have fallen to their extreme levels. But if we consider the relative strength of all these stocks, then in that Tech Mahindra is much better candidate to buy for, because it has fallen after hitting new highs and it is now very close to its crucial level, but it is still much better as compared to other stocks in terms of their previous lows. So at current levels, Tech Mahindra looks much better candidate to take some long bet with a view of bounce back or short-term trade. We can again expect on the higher side 1625 or 1650 sort of levels. And day before yesterday's levels, and I mean to say the lows of Friday, they are going to act as major trend deciding levels. So those levels should be the final stop loss for creating any long positions. For Tech Mahindra, that level was 1465. So 1465 should be the final stop loss for buying Tech Mahindra at current levels. Along with Tech Mahindra, I would like to go with Coforge, because there also we saw huge hammering. But since last 2 days, the stock is stabilizing above the level of 1330, 1335. So we can say that the stock has made a meaningful bottom at 1330. That should be the final stop loss. Currently, it is around 1390 and it's a high beta stock. So whenever there is a upward activity or some rebound in the market, we saw this stock moving back to its important resistance level. And the resistance level is around 1550. So at this level, Coforge and Tech Mahindra should be the candidate to buy for.
Okay, so there you go, viewers. You've got two trading ideas from the IT pack for today, Coforge and Tech Mahindra. Got that. Aishwarya, I want to talk defense stocks with you. I mean, Cochin Shipyard obviously is specifically in focus today because of this Navy contract that they're going for. What do you think of Cochin? Overall, the defense index is 12% off the peak. The stocks really got hammered after the budget, right? Would you venture in with any fresh buys at this point?
Yeah, so I believe obviously defense has been off the investor radar lately, but if I see the medium term and long term view, I believe defense story is very much in shape. With the way geopolitical situation is going globally as well as along with our neighbors, I believe the intensity of spending by government is there. And if you look at the way the order book has spent out for majority of this player, I believe that continuity of the revenue growth will be very sacrosanct going ahead. At present, what I will plan through is more investing through larger defense players in the name of BEL or HAL. BEL is possibly one of the best performing stock of last 1 year. HAL has seen some issues lately because of them not being qualified for certain large orders, but I believe that part is not going to really impact them, and that will be more, the performance of the stock will be more dependent on how they turn around with their ability to get G engines and deliver on that front. But apart from that, two names I believe going down, whether it is Cochin or possibly other names, the valuation is a parameter which is getting us a bit of uncomfortable zone given the way that the growth is there. So we will be buyer into those names if the valuation comes more in favor of risk reward. Currently, I think we will be staying away from majority of the mid-size defense name and small size defense name, including players like Cochin and others. But I believe if you have a long-term outlook of say, 3 to 5 years, then this valuation can be justified. But we are more of a value picker, and that's why we are staying away from these kind of players. And that advice I will give for investors, that you should be see valuation in conjunction with growth to really make out something meaningful from the defense story going ahead.
Okay, all right, got that. By the way, speaking of defense, we should keep our eye on TVS Supply Chain as well. That's another stock in news today. TVS Supply Chain has partnered with an Italian company, an Italian group today. And it's a partnership to look at interests in the aerospace arena in defense. So it seems the TVS group is also looking at defense as a big opportunity, and that stock's already reacting in the pre-open. Before I come to both our guests and we take our compounding idea of the day and the final trades for the day, let's look at the pre-open session which has kicked off. It's a little quiet, like the GIFT Nifty was indicating. There's a bit of a cautious start that we're getting. That's TVS Supply Chain on the screen, the stock that we were just discussing. The Nifty is down about 32 to 33 points at the pre-open session right now. Metal stocks are looking a little weak. Hindalco is down 1.5. JSW Steel is losing some ground as well. And then you have some of the larger banks, SBI, ICICI Bank. They're all a little quiet in the pre-open session. We should get some of those pre-open rates up. That's how it's playing out. Reliance is also down by about 0.5%, and that explains why the pre-open session is off to a bit of a quiet start. Okay, Shrikant, so coming to your trading advice for the day. So those are the stocks. We've got the stocks on the screen. Some of the gainers you can see are actually on the IT side, and both our guests have pointed out that IT does offer opportunities right now. It's just you need to decide your time horizon and what you're going with. And Shrikant has already called out Tech Mahindra and Coforge as his two IT trades. So those pre-open rates will keep playing on the screen. Beyond the IT names, Shrikant, what else would you go with, your trades for today?
So I think if we go through with the momentum and trend in the market, then we need to focus on metals, and there specifically steel stocks are doing much better. Whenever there is a correction in the market and recovery, we see first buying interest in stocks like Tata Steel, Jindal Steel and Power, JSW Steel, and there most of the stock have crossed their all-time highs. So which is something really significant. And this market is particularly the market of trend followers market. So I am of the view that we should look for adding stocks like JSW Steel, Jindal Steel and Power at current levels. And if there is a lower opening, then it will be an opportunity for traders to take some long bets, especially for Jindal Steel and Power. Currently it is around, we can say around 1210. In case if there is any lower opening, then also it's a buy. But it's a buy with a final stop loss at 1180. Again, we can expect 1250, 1275 sort of levels in next 1 or 2 days of time. So it's a positional trade. We like JSW Steel. There also we have a target of close to 1300. we can look for adding this stock at current levels with a stop loss close to 1230 on the downside. And after um, uh, metal space, if we have to focus on any particular sector, then I think private banks have now very close to their important support levels. HDFC Bank especially, which was around 1000 levels, fell to 900, and yesterday we saw decent pullback. So at 925, it's a buy with a stop loss at 905, and again we can expect 950, 960 sort of levels. So ICICI Bank, HDFC Bank, I think these are the stocks to buy for even at current levels.
Okay, all right, got that. Thanks very much, Shrikant. Great to have you on the show this morning. Thank you for joining in and giving a lot of context to our viewers. And we hope this is, the first of many, many interactions. Look forward to remaining in touch with you and your team. You have a great day. Thank you.
Thank you, Somi.
All right, Shrikant. Thanks very much for that. Aishwarya, before we move on, capital market stocks, yesterday's big story. The way BSE sold off, the way, there was weakness in Groww. Angel One was a major casualty yesterday. Now we know the news that RBI has tightened this financing, bank financing for this segment. But how bad is it? And what's your approach going to be?
So, if we really connect the dots, will be, it all started with budget, right? When FM came and said that, okay, let's increase the STT. And then we saw that the possible impact on FNO volumes. And then RBI came out with, obviously, we all aware about bank guarantees and the requirement of higher funding. Possibly, it will impact the HFT, the high frequency trading, which is a large part of the FNO segment. And I would not be surprised if regulator came out with more restriction on to curb the speculation part of FNO. So that intent of the government is very clear, that they want to clean that speculation part, especially done by the retail participation. And I believe we have seen that happening with first initially with online gaming, and then we possibly saw into other segment, and then possibly coming into this FNO. And that is what is creating pressure on both the brokerage houses as well as the exchange. Now, having said that, we are mentally ready for more restrictions coming over the next couple of months or so. But we believe that the ability to maneuver this with the exchanges is pretty high. All this will bring more stickiness to the I would say the growth numbers. They might be a blip for a couple of months and so, but market will find its ways and means. So obviously, most of the street is expecting there will be 10 to 15% kind of a negative impact on the FNO volumes on account of these initiatives of the exchanges. But we believe that this is slightly overestimated. The impact will be there, but I think it will be in the range of low single digit on FNO volumes, primarily because of HFT, because once your cost goes up, the arbitrage and their IR gets a direct hit, and their ability to maintain that alpha goes down. So that could be an area which will get this volume decline. But if you ask me, at Fidel, we are very positive on exchange. We are taking it from 2 to 3 years view. We are very positive on players like BSE. We also like NSE, being the IPO is around the corner. And we believe that the growth all of these companies are pretty strong, and this will be, if you see the last 2 years, we have seen enough of this kind of event, and then we have seen the reversal also happening very anytime soon because of any smaller changes here and there. So we remain positive as long as the growth and the internal stack is very strong, and we believe they have the whereabouts to manage and maneuver through this uncertainty. So in short term, there will be volatility, but at least if you have a 6 month or a year view, we are very positive still beyond that.
Okay. All right, Aishwarya, thank you so much for joining in today and giving us your view on all the stocks that we have discussed and covered. You have a good day, and we'll connect again soon. Thanks for joining in.
Thank you.
Well.